Hi all, welcome to Search for Yields, the weekly newsletter from INR Bonds. I'm Arjun Patsati, and in this week we will talk about MLDs or market-linked debentures. Market-linked debentures have been in existence for almost more than 15, 16 years now, and initially they came about as a structure to protect capital with a payoff based on equity indices, largely Nifty and other well-traded indices. However, as we come into closer to 2021 to the current year, there has been a lot of issuances that is based on government bonds, that is the GSEC, which is largely the 10-year GSEC or the closest benchmark GSEC. And these GSEC-linked MLDs or market-linked debentures are seen as a substitute to bonds and other fixed income products, including mutual funds, as they offer a higher, some of them offer better than market yields. And also because MLDs being a listed instrument are treated as equities. And if sold before maturity and within after 12 months, there is a capital gains benefit, long-term capital gains benefit. And so many investors seem to have been preferring GSEC linked in MLDs. Now, the MLDs have a payoff, as in the payoff is based on the movements of the underlying index. So in a case of a Nifty, it is very clear that wherever the index moves, there is a payoff that happens. But in GSEC linked MLD, the payoff is also based on the movement of the GSEC, but the MLDs are structured in such a way that the payoffs are very, mostly improbable scenarios. For example, a GSEC price has to fall almost 75% for the MLD not to pay, not to give the payoff as promised at the time of issuance. So clearly, investors are viewing these MLDs as listed equity instruments to be sold before maturity and to again take advantage of the higher yields offered by these issuers. Now, so given that the interest rates are very low in the economy at this present, there is more and more appetite for higher yields, especially post-tax yields. And MLDs are gaining a huge amount of popularity with investors across the across the higher net worth class. And more issuers are also coming out with MLD issuances. And some of the popular MLD issuances include microfinance companies run by gold loan companies like Muthoot and Manappuram Finance. Then you have even companies like Hero FinCorp issues MLDs. Shriram Transport has issued, also is a regular issue of MLDs. So many of these issuers also come out, and so do a whole host of other issuers who come out with MLD issuances as they are finding a lot of favor. So typically, you could say they're typically of a 2 to 3 year maturity. Some of them have callable structures, some of them have non-callable structures, etc. Some of them have extra collateral depending on the issuer. And you can see, I mean, you could have anything rating between A to even AAA if it's a PSU or a very highly rated private sector company. And also that these MLDs come in the yield range, of between, if it's very short term, it could be around 7%, and it can even go as high as 12%, 13%, depending on the issuer. So depending on investors' risk appetite, etc., they look to invest in these MLDs. So as usual, INR Bonds has curated MLDs with their own proprietary risk score, and also has given a lot of knowledge on how MLDs must be looked at in terms of especially the government bond linked MLDs, and for you to understand and invest if you want to invest in MLDs. And we also enable you to see the most information, what are the last traded yields, what the credit notes on the issuers, etc., so that investors can take a very, very informative decision on MLDs. And this is extremely important because MLDs are a structured product, and there is a huge amount of knowledge required to invest in MLDs. And do not forget to log into QuickInvest to see our curated list of MLDs, where you can take a highly informed decisions and go through a seamless investment process. Thank you very much for listening in to this search for ease, and please do not forget to um, subscribe to your YouTube channel if you have not done so already.